right, welcome back to another episode of the Investigating Pathways podcast. Today I'm joined by Kevin, a partner at Bain Capital Ventures and Crypto. Kevin, thanks so much for being here.
Thanks for having me.
Absolutely. Stoked to do this. So I want to start off talking about a little bit of your origin story. Can you tell me a little bit about your life as a kid all the way through college?
Sure. Yeah, I was born in Miami. My parents immigrated to the United States originally, as research assistants at the University of Miami. They, in part, thanks to executive action after Tiananmen, they had the opportunity to stay in the country and get on a long-term visa and then permanent residency. And so, when I was born, they were still trying to figure out where they might end up, professionally and geographically in the country. They moved around a lot in those early years. So they sent me back to Beijing, where I grew up with my maternal grandparents for several years.
Oh, wow.
And I do think I've been reflecting on this recently. I do think that probably like the fairy tales and moral lessons you learn, when you're young may differ significantly. I must admit, I still don't know the plot of like The Little Mermaid and stuff like that. And probably learn, the equivalent, Chinese stories and myths and tales, and it's probably informed a lot of, my personal values and morals. We ended up moving back when my parents landed in New York and then finally in New Jersey, where I ended up graduating from a high school in central New Jersey that was actually minority majority at the time that I was there. I think even more so today, a town called Edison, which is I guess known to be a significant enclave of Indian Americans as well. So it was a really interesting community to be part of growing up, and then I ended up, as you know, going to college in New York.
Gotcha. So right out of college, I know you worked at, I don't know how to say this, Adepar, right? And then Bain and Company. So can you tell me a little bit about both of those experiences, if there's anything sort of substantial that you learned from there, and sort of how that influenced you to eventually end up in crypto, or not crypto, sorry, venture capital?
Adepar was really my first technology job. I always thought I wanted to work on something entrepreneurial growing up. I never really knew quite how to get there. My family was wonderful. They really were mostly in the sciences and healthcare, and they didn't know much about the business world. None of our family friends did either. I kind of fell into the opportunity at Adepar on more on the business development side of things pretty early on. I think by the time when I first joined them, they were maybe 30, 40 people, and were growing very quickly over the course of my time there. I think what Adepar does is they make wealth management software. They make essentially software that aggregates the portfolios of the clients of wealth managers, and then makes it easy to report on that. So if you imagine if you're a wealth manager and you need to assemble kind of quarterly performance reports or monthly performance reports for maybe 50 or 100 of your clients, and they all you need kind of a super mail merge that merges all the individual client portfolios. So every individual knows their own portfolio. Like that performance, that used to take a lot of time to prepare, as you can imagine. And Adepar sort of like dramatically simplified a lot of that experience. It's commonly seen as a reporting tool today. I think when you look at like market landscapes, although certainly at the time that I worked there, they wouldn't have defined themselves that narrowly probably. I learned a ton, about what it was like to be an early stage company. We shared some common DNA with some of the most successful companies in Silicon Valley. The co-founder of Adepar was a co-founder of Palantir, with a lot of sort of early sort of PayPal people who were investors. And so it was a really interesting environment where there was a lot of passed down wisdom from other billion-dollar businesses that can build. And so it was really cool. And I think that experience really defined for me that the most exciting things in entrepreneurship were happening in technology. And it convinced me that I wanted to be probably at an early stage technology company from a career standpoint.
Gotcha. So talking about being in an early stage tech company, I know obviously you worked at Bain and Company as sort of a management consulting firm, and then you ended up back in New York in venture, right? So how did you sort of flip from wanting to work at an early stage company to being on the other side of the table and going into venture at what I think used to be AOL Ventures?
I it's true. I had a number of different experiences before I ended up, at Fundera, which is this early stage company. The bulk of my sort of pre Bain Capital Ventures journey, and a lot of it was just about exploration. I think, I was, I guess I happened to have some, like Adapar sold as a software as a service model, as a vertical software company. And that experience was relevant to the team at AOL Ventures. I had a chance to spend some time with them.
Mhm.
Right as the team there spun, you may know, they spun out to form their own fund now called
Yeah.
Bowery Capital. And it was a great experience. It was good to generalize a bit more. I think you see one particular company go deep on a particular problem, which is intellectually very fulfilling in many ways. And I think venture allows you to kind of zoom out a bit more and compare and contrast that experience and apply the learnings to other investments. And I got to work on some of their investments in content marketing, software, and sort of kind of a global data marketplace investments. While I was there, they were sort of very generous about having me be involved in some of these investment processes. Then in Bain and Company, I think I got to work with a kind of a Fortune 500 client. So we were working with the board and the CEO of a sort of significant financial services company.
Mhm.
And I think I really loved my time there, actually, and I have only positive things to say about the culture and in many ways about the work. I think there are probably many things I could have learned by staying there longer. But I couldn't shake the feeling that I was on the wrong end of the business life cycle. That
Yeah.
for me personally, I think for many people, it would be intellectually satisfying to help, determine the direction of a company with, tens of thousands of employees and, billions of dollars of revenue. And, the sort of strategic decisions made at the board level, would have a massive impact on that business and on their market. But I felt like what I cared about was the companies that were the young startups
Yeah. The early ones.
that were disrupting, the company we were trying to help, adjust their strategy. They were certainly concerned about, company A or company B that was,
And so you wanted
was
to be
fast
working with
rising
company
and
A and B.
yeah, taking a portion
Yeah.
of their market. And so I wanted to be at company A or B. I wanted to start company A or B.
Yeah.
So yeah, and no, no negative other than I think a personal preference for what I wanted to do, which is a little bit more operational and a little bit and far more growth oriented than strategy oriented.
Gotcha. So is that what ended up getting you to Fundera, which obviously you were the first business hire, right? Like what, employee number 3 or something, right? So is that sort of what got you switching away from venture and more back into being like that company A, company B model where they're trying to disrupt the space that they were in?
Yeah, I was fortunate that when I was an undergrad, I got to run the Entrepreneurship Society, and through that I met this advisor who had been an alum, and he had started and sold another company, a social media app actually called GroupMe, to Skype
Mhm.
Microsoft, and he helped us sort of with a number of our initiatives. We set up kind of the first internship program in university to help students like work at startups during the school year. And so I got to know him, and I was trying to, I happened to consult with him at some point about what I should do next in my career, and he mentioned that he was gonna leave Microsoft to start a new company. And so I got to know him better. They ended up taking a seed term sheet, from Coastline first round, um, and and for me, I'd always been interested in the space.
Yeah.
They were building in what was then known as sort of shadow banking. I think now more, perhaps more flatteringly called sort of alternative lending, buy now, pay later, etc. And I thought that was a fascinating space to be a part of. It seemed like a growth area in the economy. And I was certainly tied to my prior work at part even in digitizing financial services. And
Yeah.
yeah, and as a result of having known Jared, I think I got involved pretty early on. He sort of had sort of a bunch of folks, kind of his co-founders and a couple of early team members. We all sort of went from sort of they were all sort of contracting technically, and then we all went sort of full time roughly the same time, if memory serves me right, to be in January of 2014. Um,
Mhm.
and we launched the product must have been a few months after that. So I certainly feel like I got to be a very kind of ground floor of building the business, which was a really great learning experience.
Gotcha. So following that time, obviously you ended up back in the Bay. You joined Bain Capital Ventures where you're at right now. So what got you itching to be sort of back in the VC game after a couple of years away from it, after your like relatively brief stint in it at some point?
I really enjoyed my time at Fundera. I was there for a little over 3 years. You know, we grew from free product to 10 million plus in revenue run rate,
Mhm.
um, and over 65 employees by the time I left, and uh, I felt like I had a inordinate amount of responsibility for someone of my relative lack of experience, frankly.
Yeah.
And so I think for me, yeah, I felt like I could go to another product. I thought about going to other product jobs, but I sort of felt like necessarily they were going to be there's going to be a narrower scope.
Yeah.
I wouldn't have as close a relationship with founders, and maybe like we would grow faster or further or whatever. But um, it felt hard to get excited about immediately jump into another product role after the one that I love so much at Fundera. Um, and also sort of is driven not necessarily by my desire to leave Fundera, but more by personal. Like my now wife chose to move to the Bay Area to go to law school, and so I felt like venture. I'd gotten to know the Bain Capital Ventures folks in college, also through this entrepreneurship club, and we'd host a bunch of events with them. And I felt like most of these venture jobs, as you may know, are you do it for a couple of years, and you fulfill a certain role of like helping the team make better decisions and see more opportunities, and then
Yeah.
you find the right next thing for you. It's usually not staying at the firm.
Yeah.
And so that was very much, I think, what I thought I was coming to, and what I planned to come to. I figured I would meet a lot of people, see kind of different business models. I wasn't convinced I wanted small business, financial services, PM for the rest of my life. And in in 2 or 3 years, I would have a great vantage point to go and jump into another young company and make another swing, or maybe even start a business of my own.
Yeah.
Um, and so that was the original plan. Uh, and I was fortunate to get I think to learn a lot over the course of those years. And I suppose in an unintentional way, I've liked the job better than I expected. And hopefully, have done a good job of it so far, and have ended up here for 6 years rather than 2 to 3,
Yeah.
and maybe for many years to come if things work out.
Yeah. So obviously, as soon as you got to the firm, you moved through the ranks really quickly, right? Like investor to youngest principal at the firm to partner, right? What was that experience like for you? Had that sort of happen? How'd you make progress so fast?
Well, I think that you know the important part is sort of is the work. I think it's less the title, and comp or whatever. I mean, those things are important, of course, but I think for me, it was more about in any given year, could I develop kind of the next level of capabilities to do the next job? So
Yeah.
I think there is sort of, can I um, you know write memos and build decks and sort of help us make decisions on investments. Then there's, can I contribute meaningfully to our thinking on investment opportunities? And then there is, can I help us find founders and opportunity spaces we otherwise wouldn't have considered or recognized as an opportunity? Um,
Mhm.
can I can I be the person that they see, as the sponsor? And I don't think any of those questions have. It was obvious to me from the beginning that I would be able to answer, but I think as I've been able to develop kind of a point of view and an impact on each of these items, um, that progression has felt relatively natural in retrospect. But look, I feel very much that I'm at the beginning in many ways of my learning and growth. I feel like I'm at a stage where I feel like I learn an incredible amount every day from the founders I get to work with. And I also think there's an element of this job which is really just about building a long-term reputation.
Yeah.
That there's no shortcuts to that
People got to
either.
know you, right? Like there's no
Yeah.
way around that.
Yeah. So I think, I guess I just wanted to, I try and think about this stuff less in terms of what is my title or whatever in a given year, or, what lists on what magazines I'm on or whatever, and more about, have I helped our limited partners to see the returns that they want on investing with us, and have we as a team been able to work with phenomenal founders who are building game-changing businesses, and do those founders feel like I have been able to make concrete contributions at some or many points in their
Mhm.
journey that has sort of helped inflect kind of the progress that they can make. Those are the more sort of concrete milestones that I care a lot about.
Gotcha. Gotcha. That makes a lot of sense. So now I want to step away from sort of your journey through venture specifically, and I want to talk more about you being a venture partner at their new crypto fund over there, right? Which I believe is starting off at like what, over $500 million or something like that. So I'm curious, what interested you specifically in investing in crypto?
Well, I think that when people talk about crypto and Web3, and by the way, you're right. We recently closed on a $500 million crypto focused fund. We've also built out a team around that.
Mhm.
I'm a small part of that. We have other partners with lots of different backgrounds, but especially research partners who come to us from PhD programs in mathematics and cryptography and I think sort of deeply technical areas where I think they're fully more appropriate to the sort of stage we're at in the development of the technology around crypto and Web3. Um, I think that for me personally, there are people who feel like you can be a Web3 generalist, that if you understand the principles by which decentralized networks work, then you can invest in decentralized finance and in digital goods, NFTs, and in layer ones and layer two scalability solutions and privacy and
Yeah.
my personal view is there may be people who are talented enough to do that, but I am not one of them. My view is that I'm interested in crypto, from the sphere of what I would know, which is financial services and financial technology. Decentralized finance is financial services and
Yeah. I just
financial
that's where
technology.
I thought you were going to go once you said financial services was your forte.
And so my work in space is really centered around that. So I work with a alternative trading system business that was acquired by BitGo. I work with a fixed income protocol. I work with I helped us sort of um, build a relationship with a proprietary trading firm. uh, we recently led a seed financing for a business that's building infrastructure for MEV in Web3. And so I think these are all kind of fundamentally like they are I have to understand the underlying technology.
Mhm.
But I think equally important is understanding the principles by which financial services work today and
Yeah.
how decentralized networks can change the way they work. What pros and cons come with that. So I try and stay within kind of my sphere of understanding in terms of where I invested in crypto.
Yeah, because I'd imagine it's like hard to shotgun, just take the whole crypto industry and just like shove yourself into it, right? Like there's just so much to be looking at. How do you even know where to start? So I think it's interesting that you start out in DeFi. So I'm curious. Obviously crypto is like over the past, I don't know, 2-ish years, it's been moving incredibly fast. There's so much hype that has sort of grown around crypto, right? Even in the context of decentralized finance platforms, there's so much that is being constantly invented, created, discovered. And it seems like outwardly, as an investor in the space, it'd be pretty hard to keep up with all these sort of relatively chaotic changes, right? So how do you navigate that throughout the space?
Well, I think you can only scope it.
Mhm.
I mean, I think assuming, of course, that your strategy as an investor is to understand deeply what you want to invest in. I think there are investors who take a different approach, and it's not right or wrong, which is to sort of, follow the signal of others or to judge based on kind of diligence they can receive from other parties who might know the space deeply. But I think, we, by virtue of the talent strategy, as you can tell, I think we believe the founders value original research and depth of understanding of the problem. So I think that I think you have to recognize how much time you do and don't have, what technical capabilities you have and don't have technically. And so I've tried to kind of scope my involvement, as mentioned before. I think um, within DeFi, I think there are things to be excited about and interesting things to invest in. So we're just trying to I think even within that though, we have different team members here who focus on uh, you know uh, say more kind of trading platforms, Web 2 to Web 3 on ramp, versus people who focus more on decentralized exchange networks or lending protocols. We think about analyzing Maker or Aave or et cetera. Like we'll have team members who maybe specialize a little bit more around that. I think relative to the others, I'm a little bit more opportunistic. I tend to follow what talented founders are telling me. And we'll do. I think we have a general understanding of what's going on in crypto. We have a point of view on how we think the ecosystem will evolve. And then where we meet founders whose point of view either changes our mind or is aligned to what we think the future could look like, and we think they're talented, interesting vision, something that could be venture scale return. We'll partner closely with them and learn with them.
Gotcha. So since starting your time, sort of splitting your time between crypto and I guess non-crypto, right? How have you sort of navigated the divide between the two? How do you know where to spend more time on deals in the non-crypto sector versus crypto sector? How do you navigate that division?
Well, since I focus on pre-seed, seed, stage founders, is often when we're meeting people for the first time, and often where we're investing for the first time. The reality is that I don't get to determine what they work on.
Yeah.
And so I think we are somewhat I think we've talked about today a lot of this lens of what am I focused on thematically, financial technology, vertical software, and DeFi. But really I follow kind of what like talented people who have an interesting track record, just entrepreneurial, what they want to build next, and so
Gotcha.
often it's a bit of a convergence, as to say, like if we happen to be of a similar mind to the founder, and we're both being taking a commercial standpoint, they'll have ideas, we'll share feedback, and it might converge something that we're both really excited about. But really, it's all about what the founder thinks is the right answer. They tend to have the most experience in the space. Like far be it for me as someone who's not working on the product every day to presuppose what the shape of the solution should look like.
Gotcha.
Yeah, so
That's
we'll just follow what talented people tell us.
That makes sense. Just listen to people who are smart. Yeah. Cool. So I'm curious, do you have any hot takes on, I guess, where decentralized finance is sort of going to be going in the future, given all the constant changes in crypto?
I think it's interesting. As we've recently had a bit of a classic like financial markets panic in crypto. You've seen a number of particularly centralized institutions encounter insolvency. I think that there's a lot of discussion around risk management. Did they engage in sort of poor risk management practices, which is probably true to some extent for many of the players. But I also think about it as they encountered the boundaries of investable yield opportunities and good risk adjusted returns in crypto lending. And I think it speaks to the size of the market actually, and how much capital can be absorbed and used productively when lent out. So I think that what we will see over the coming 5-10 years, if the vision bears out, is more lending activity and more DeFi activity that is tied to what we might different use cases than I think the core use case today, which is sort of going degen long or short on things, trading on margin, the way that Three Arrows Capital did. I think you'd want to believe there will be either real or metaverse mortgages. I think you'd want to believe there's kind of advances on contra employee pay, all the things that are legitimate and good risk adjusted returns for lenders in outside of crypto. I think you want to believe either will migrate, plug into, or be recreated in decentralized finance. That sort of perhaps new kinds of lending products will become possible as a like flash loans will become possible as a result. But I think clearly the market for lending billions of dollars to market participants to make bets, again, speculative bets, I feel is that there's a low ceiling. And I think we've encountered that ceiling over the past few months.
Yeah, I know. I totally get what you're saying. There's so many like possibilities for expansion because there's so much that is being discovered. People are still figuring out how the technology works on the blockchain. All that's so interesting, not only in like DeFi, but also generally in crypto generally. But yeah, I think we're sort of approaching the end of our time block, and I think that brings us to a really nice close. So I think that was quite an interesting spot to end. And yeah, Kevin, thanks so much again for taking the time to come out and talk with me.
Of course, it was good to chat with you, and appreciate you having me on.
Absolutely.